Okay, my beautiful friends, here we are, you and me, together again. I love this part. Tuesday, May 17th, 2022. People, I know what you're thinking. The stock market did great today. Higher across the board. NASDAQ up like 3%. Lovely. Yes. All well and good. But please stop focusing on the stock market. The story today was the 10-year yield, was the debt market, period, the freaking end. Are you watching this? The 10-year yield right now is a shade under 3%. What happened as of late? 3.14 on the 10-year yield, cratering down to a 2.8. This is fear. Cash making its way into the debt market. Now we're seeing it come out. When cash comes out of the debt market, the 10-year yield rises, and that cash makes its way into the stock market. It's very simple. This is the easiest dynamic to pay attention to. You can look at a lot of things in this market, but this is the key. I've told you since, time immemorial. Debt market, 10-year yield is what you need to look at. Okay, does this mean we're out of the woods? We're going to talk about that. I'm actually not convinced as of yet, but this is a positive sign. Let's stick with the market again just real quick. So on top of this again, nice rally across the board with regard to the stock market. 10-year yield is where the real story is. The comparative strength of the dollar nosedived today. Nosedived. Last time I looked at it, it was down 0.82%. That's big. Despite that, gold and silver with like fractional gains. Cryptocurrency is doing all right. You got Bitcoin back over 30,000. A lot of volatility there. If you recall, and I urge you to look for yourself, at the end of last year, I had several themes. Number one, we were going to see inflation surge out of control. Number two, we were going to see extreme volatility in the stock market and extreme volatility in the cryptocurrency space. This was the end of last year, outlining what would happen this year. And I think I pretty much nailed it to the wall. It's pretty easy, I think, to see things. Look, I know my nickname, okay? Greg Mannarino, whatever I'm a perma bull, I'm a this and I'm a that. All I do is look for opportunity based upon how I see, and I'm not guessing here, how I see cash moving through the markets. More specifically, is it going into the debt market or is it coming out of the debt market here? When you see, again, the 10-year yield rising like this, it's a tell, big tell. Cash is leaving the debt market. Where is it going to go, especially in an environment like today where the dollar is nosediving? It's only going to go to one place, stocks. It's going into the stock market. Risk. People want risk. You have to understand. How do you think, for example, Wall Street hedge funds and these, investment banks make money? You think people like me, do you think we do it by not taking on risk? You got to take on some kind of risk here. And you can do this in a way, if you're diversified enough, again, you could pretty much shrug everything off. You really can. And I'm not just talking about, again, being in the stock market, people. You got to own assets. Classic cars, if you're into that kind of stuff like that. Artwork, musical instruments. I believe cryptocurrencies as well. You need exposure to commodities. You need exposure to the stock market, real estate as well. All of this, like I've told you a million times, I'm so far from a one-trick pony. It's not even funny. You gotta have your assets spread out, okay? And this will cushion you really against big shocks that can occur and will occur in the market. And what we've seen as of late, I know everyone is saying the opposite but me. This is a normal corrective phase in the market after years and years of going basically straight up. What do you expect? Did you really think the party wouldn't just maybe take a pause a little bit here? This is, in my opinion, a very bullish move based upon action in the debt market. In the debt market, people, don't let anyone tell you something different because they're wrong. The debt market is the key. If you can understand that, if you understand that the stock market has become a derivative of action in the debt market, nothing else matters. Forward guidance, earnings, PE ratios, it's all dog shit now. It's just about how the debt market is being played by central banks. They're the number one player out here, period, the end, and that will dictate to us where the market's going to go. We are not in a crash. We have not been in a crash, despite the fact that there's a lot of YouTubers and people off YouTube saying that we are in some kind of a crash here. And if you are in a lot of the positions that I have outlined for you, the ones right on my website, traderschoice.net, oil and gas producers have gone, frankly, retarded. They've made us a lot of money here. Yes, banks have certainly underperformed. But did you see what happened today with the major banks? They're turning around. This market here, if in fact this plays out like I believe it's going to, this market absolutely could hit new record highs before the end of this year. But the financials and the banks have to play a role. Okay? The financial sector is huge. So I believe it's going to turn around, and I think we might be seeing some of that right now. Anyway, we did hear from the Federal Reserve today, Powell. You see, if you notice how the market reacted, did you see it? We were pretty much off to the races most of the day. Then when Powell opened up his mouth, his pie hole, he sounded kind of like, okay, we're going to do this and the Fed's going to be aggressive or we're going to keep raising rates. The market didn't like it. We came down a little bit. And as soon as he shut up, the market said, yeah, sure. The market's going to shrug this guy off. Okay, the market realizes he's full of shit. All right. The Fed has no intention to stop inflating. They will continue to inflate, and they will continue to create inflation. Okay? They're going to inflate. They're going to continue to buy assets. They're going to continue to suppress rates. You know this. It's not going to stop. I know there are some of you that somehow believe that what the Federal Reserve says is true. Really? Public enemy number one? You want to believe that? Good for you. You're going to find yourself destitute in this environment. The Fed's not going to stop. The Fed will buy the market. The Fed will support the market. The Fed is fostering a wealth transfer effect, at the same time destroying an entire class of people. As a matter of fact, here's the theme today from a lot of the mainstream propaganda ministries. The U.S. consumer, this is a quote, is under attack due to inflationary pressure. Doesn't that sound kind of like, well, what you and I have already known for I don't know how freaking long right now? Anyway, so, this morning is kind of interesting. I explained to you that there was fear in the market, and you can see this again reflected in the debt market. 10-year yield comes down, that's fear. Goes up, it's kind of relief. Stocks follow. They don't move in absolute tandem, but it's pretty damn close. Now today, a big sigh of relief from this market, stock market, despite what came out of the mouth of Jay Powell. Piece of shit that he is, okay? The lying freaking freak that he is, and he won't stop, and he won't be held to account for anything. Of course, it's the war. It's supply chain disruptions. It's COVID. It's everything else besides central banks, Federal Reserve, pointing at my hat, who has been on a mission here. I'm laughing, but it's pathetic, to continue to inflate and inflate and inflate, going out of their way to create inflation, and they are still doing it right now. It's inconceivable to me that anyone could buy the bullshit that the Federal Reserve is raising rates, raising the federal funds rate because they're so determined to combat inflation right now. You got to be kidding me. The money supply continues to balloon. And that alone is massively inflationary. And the Federal Reserve, they're trying to convince people, or maybe they have, that they're not in this market, that they're not rigging it. And I'm talking about the debt market. That's all they do is manipulate debt. Number one, they have no tools. So when you hear Powell talk, and I've said this a million times too, about all his tools that are in his toolbox, he has one tool, okay? And that one tool is how they can manipulate debt. And I think you understand that if you follow this blog. What else did I write down here I wanted to talk about with you? Pretty much that's the story here. I believe the market is playing out the way I have explained to you. I have not wavered from this ever. Okay, this entire route that this market has been in is a market adjusting to a Federal Reserve that's going to be raising rates. That's it. Listen to this, okay? And let's see if I'm correct. As we see, the 10-year yield is now moving towards 3%. I told you we're going to settle above 3. It was interesting that we did settle above 3. We came down after a lot of fear came in the market. Market got hit, coming back up now. 10-year yield is going to settle above 3 again, and the market's going to love it. If we can get the banks to play here, and I think they want to play, I really do. They want to play. This market is going to take off. I want you to be ready for that. Right now, the S&P 500 stands about 15% off of an all-time high. As I've explained to you as of late, the S&P 500 is trying, and I think relatively successfully lately, to stay out of bear market territory. Now, as I said in the beginning, I'm not totally convinced this is over. We need to keep gains here. Now, I explained to you again, we needed to see a few things happen. The ideal scenario, remember I covered this, would have been a rally yesterday, which we did not get. We did get a fractional gain in the Dow. The S&P finished flat. NASDAQ fell into some pressure. Okay, so we did not get a follow-through rally off of Friday. But today, a very nice rally. Now, what this market should do is give back a little bit. We cannot give back all of the gains we just put on Friday and today. If we do that, the market's going to fall further. Watching the 10-year yield, you would see the 10-year yield drop, and then you would expect to see stocks follow. You understand? Look, I'm turning you into like super traders, super investors out here, and you can do this so easily by just understanding literally one dynamic, maybe two, how the 10-year yield responds with regard to fear and greed. The whole market's about fear and greed. You all know that. Anyway, so let's see how this plays out over the next few days. Market cannot give back all of its gains. If it does and that 10-year yield drops, you can expect the market to fall further. If in fact we get a 10-year yield above 3%, okay, that would be a sign that the market is feeling okay. And if the banks want to play, and I think they want to play, like I said, you can expect this market to make a pretty significant move higher in the short run. And beyond any shadow of a doubt, the market can achieve new all-time highs before the end of the year. We're not too far off with regard to the S&P 500, people. I know all the fear out here, the YouTube channels that are continually pushing the crash narrative, and they've been wrong. I want you to think about this, not half of the time, but 100% of the time. They've been wrong all the time. They have not been right once. I want you to think about that. Me, I'm definitely not right all the time, but my record is a hell of a lot better than 50%. I mean, anyone who follows my work has to say, you know, look, Greg, I'm doing a relatively good job out here. And I'm not tooting my own horn. I am just trying my hardest to make this whole thing work for you. For me, I think I got it down. I want us all to prosper here. And we all can. Understanding how cash moves through markets. Realizing this hyper debt bubble. It is a threat beyond the greatest threat to humankind, period, the end here. You must bet against it. You must become your own central bank. You need exposure to a wide variety of assets. You understand? I think you do. I don't want this video to go on too much longer. All right, with that said, please comment. Where's your head out here? Am I making sense to you? Does what I say connect at all? If it doesn't, that's okay too. Ponder these things, all right? I'll see all of you in the morning. Love you a lot. I mean it. I'm out of here.